Hello everyone, and welcome back to the channel where we decode the complexities of the market, focusing on unique opportunities and educational insights. Today, we're diving deep into a fascinating situation that's popped up on our hard-to-borrow screener, RYOJ Company Limited, ticker RYOJ. We're going to break down what makes this stock intriguing from a short squeeze perspective, explain the mechanics, and highlight the critical factors to watch. Stay tuned, because understanding these dynamics is key to navigating volatile markets. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show RYOJ logo/chart. Let's talk about RYOJ, or RYOJ Company Limited. This is a Japanese company operating in the industrial/consulting services sector, with a current market capitalization of $43.07 million. RYOJ provides consulting and health services primarily to labor unions and companies in Japan. It's not a household name for many, but its current market dynamics certainly warrant a closer look. Looking at its recent price action, RYOJ has seen some significant movement. Today, the stock is down -4.55%. Over the last 5 trading days, it's retreated by -14.9%. However, zoom out to the last 30 days, and RYOJ is actually up an impressive +28.14%, indicating underlying volatility and interest. Volume-wise, today saw only 9,800 shares trade hands, a stark contrast to its 30-day average volume of 440,470 shares. This means its relative volume today is effectively Xerox average, pointing to a very quiet trading session. What is cost to borrow and why it matters? So, what makes RYOJ stand out right now? It's all about something called the cost to borrow, or CTB. When you want to short a stock, you essentially borrow shares from a broker and sell them, hoping to buy them back later at a low price to return to the lender. But borrowing shares isn't free. The cost to borrow is an annualized interest rate that short sellers pay to borrow those shares. Think of it like paying interest on a loan, but the loan here is stock. If this fee is high, it tells us that there's strong demand to short the stock and or a very limited supply of shares available to lend out. When this cost goes into the hundreds or even thousands of percentages, it means shorting the stock is incredibly expensive, which can become a ticking time bomb for those short positions. Why this stock is hard to borrow right now? Show CTB stats. And for RYOJ, that CTB number is eye-watering. Currently, the annualized cost to borrow fee for RYOJ stands at a staggering 567.1%. Not only that, but the CTB momentum has also dropped by -78 percentage points over the last 5 trading days, suggesting the demand or difficulty in borrowing has slightly eased, but it's still extremely high. To put this in perspective, imagine paying over 500% interest on anything. The supply side tells an even clearer story. There are only about 4,000 shares currently available to borrow against an estimated float of 2.3 million shares. This extremely low availability makes RYOJ a classic hard-to-borrow stock. Our internal composite squeeze score, which factors in CTB, borrower availability, float size, and price momentum, currently rates RYOJ at a 42.4 out of 100. It's crucial to remember that a high CTB does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction that the stock will fall, and they are willing to pay a premium to maintain their short positions. Squeeze mechanics explained. So, how does this high cost to borrow translate into a potential squeeze? It's simple: supply and demand, intensified by desperation. When a stock's price starts to rise, short sellers, who profit from a falling price, begin to lose money. If the cost to maintain their short position, the CTB, is also extremely high, they face a double whammy. To stop the bleeding, they might be forced to cover their shorts, which means buying back the shares they initially sold. This buying pressure further drives up the stock price, forcing even more short sellers to cover, creating a cascading effect often referred to as a short squeeze. This can create explosive upward price action in a short period. Dilution risk check. One critical factor that can negate even the strongest short squeeze setup is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can depress the stock price and provide fresh supply for short sellers to cover, effectively breaking a squeeze. The good news for RYOJ is that our checks found no recent dilutive SEC filings, such as SMINS1, SMINS3, or 424B forms, in the last 90 days. This means there isn't an immediate, obvious risk of the company flooding the market with new shares and negating the hard-to-borrow thesis. We also found no recent reverse splits for RYOJ, which can sometimes be a precursor to other activities. Again, a quick reminder. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For RYOJ, given its current profile, here's what we'd be watching. First, continued high or increasing cost to borrow. Any further drop in the already low 4,000 available shares would be a strong indicator. Second, a significant increase in trading volume much higher than today's 9,800 share coupled with positive price action. This could signal increasing investor interest and the potential for short covering. Finally, monitoring the overall market sentiment and any company-specific news from RYOJ Boba Company Limited that could act as a catalyst. RYOJ Boba Company Limited RYOJ presents a fascinating case study in the hard-to-borrow space. With an annualized cost to borrow of 567.1% and extremely limited shares available, it certainly fits the profile of a stock where short sellers could find themselves in a challenging position. However, it's crucial to understand that these situations are complex and carry significant risks. Always approach with caution, conduct thorough due diligence, and consider your own risk tolerance. What are your thoughts on RYOJ? Have you ever successfully navigated a short squeeze play? Let us know in the comments below. Don't forget to like this video, subscribe to the channel for more unique insights, and hit that notification bell so you don't miss our next deep dive. Thanks for watching, and we'll see you in the next video.